Good evening, everyone. This is Atticus from The Complete Trade, and today we're going to be taking a look at Ethereum. So Ethereum hasn't really done much since last week. Ethereum continues to trade right at the top of the bullish ascending triangle pattern with a price target at $4,600. Additionally, Ethereum continues to close above all the key moving averages on the daily, weekly, and monthly timeframes, which is bullish for the long-term picture. So we just took a look at the longer-term picture. Moving into the shorter term picture, as we spoke about in the previous video, I wanted to see one more high on Ethereum to complete our initial impulse off the October lows before a short-term correction to the downside. Now, obviously, that one more high hasn't happened yet. The target of wave 5 of our initial impulse off the October lows still remain anywhere between $2,200 and $2,500. The biggest question in the short term right now is whether this wave 4 retracement in minute degree is in yet. Because the rally last week couldn't have been a truncation in wave 5. The rally last week was in 3 waves, topping out at the 1-to-1 trend-based fib extension. So let me just illustrate that point. Right. This topped out at the 1-to-1 trend-based fib extension, so I couldn't get this in 5 waves anyway. So let's just say we're resetting wave 4, like hypothetically speaking, we're resetting wave 4. Oh, please stop lagging. Okay, there we go. So if we were hypothetically speaking resetting wave 4, then I'm just going to take a trend-based fib extension off of these 3 pivots. Then Ethereum would probably retest anywhere between $1,774 and $1,904 before eventually blasting off to $2,500 anyway. Now, the reason why I don't care about shorter term time frame trading is whether we put in this wave 5 top this week or a few weeks from now doesn't matter to me, because eventually we're going to get this wave 2 retracement that's going to smack Ethereum back down to $2,000 anyway. So this is why I don't care about shorter term time frame trading, because in a month or two from now, I still expect Ethereum to be at around $2,000 anyway. So like I said, this is why, shorter term time frame trading to me is at least very trivial and inconsequential. The longer term targets is what is important for me, and the longer term targets haven't changed, right? We're still focused on the 1.618 trend-based fib extension at $4,659. And obviously our bull market top projections are all the way in the white shaded region between $11,000 and $22,000. So we haven't taken a look at some indicators in a while. So the weekly bullish divergence on the RSI is playing out, which is nice to see, where the price of Ethereum made a lower low back in October, but the weekly RSI printed a higher low. This is bullish. Now, moving on to the volatility expansion index, not much has changed since the last update. The volatility expansion index is still printing a very low volatility reading at 26%. Now, one thing I noticed this week was that Ethereum didn't have an extremely high volatility reading in the last market cycle. Periods of extremely high volatility are accompanied by these red bars over here back in 2016. And periods of extremely low volatility are accompanied by these dark blue bars. So because the volatility expansion index is just an oscillator, we will have periods of high volatility accompanied by periods of low volatility, accompanied by further periods of high volatility. So I wonder, since we have had over a year of prolonged low volatility on Ethereum, will the next bull market be accompanied by prolonged periods of high volatility? Obviously, I'm biased, so my answer is going to be yes. Put it this way, I'm not selling any Ethereum until we get this high volatility reading regardless. Another thing that's interesting to me is that one of the first things that we've learned when we were first introduced to the financial markets was to just click the buy button whenever the price of any asset hit the 200 weekly moving average. And it seems to me right now is that the majority of people are just throwing away the basics and fundamentals and just pounding the table for a crash, which isn't happening. The 200 weekly moving average in red is just a basing structure at the moment. The 200 weekly moving average right now is just serving as a launch pad for much higher prices, in our opinion. Okay, taking a look at the Ethereum against Bitcoin valuation, not much to update. The longer term picture remains the same. On the Ethereum against Bitcoin valuation chart, we are testing the 200 weekly moving average as support for the first time in the chart's history. The Ethereum against Bitcoin valuation did test the 200 weekly moving average as resistance back in 2021. Both of these tests on the 200 weekly moving average are denoted by the light blue circles. The weekly RSI did hit the oversold region as well. We're still bullish on the Ethereum against Bitcoin valuation in the long run. Okay, we'll close this video off by taking a look at some regression. So the undervalued region of the regression bands this week span between $2,145.30 to $3,704.70. So even with Ethereum today at $2,000, you still have the opportunity to purchase Ethereum below its undervalued region. I can't say the same for Bitcoin, but yes, Ethereum is technically still undervalued, especially if you consider our long-term bull market projections at $14,000. I'm not sure if you're going to get another chance to purchase Ethereum again in the despair region, but I really don't think you're going to care about purchasing Ethereum at either $1,800 or $2,000 when Ethereum goes to 14K. That's just my 2 cents. Okay, so that's my analysis on Ethereum for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.